you have like a real mic, and I have, you know,
I don't know, man. It's in my budget. It's in my budget. That's why.
Wow. I need a bigger, but like this is a backdrop. Like this could fall
You got
down.
a nice backdrop, man.
Thank you. I
Yeah,
made
you got
it
a good
myself.
backdrop.
Yeah.
All right. Well, we are live on Facebook. We're live on YouTube. I believe we're live on a whole bunch of other channels that Bigger Pockets controls. And everybody, welcome. We're going to give everybody a couple of minutes to jump on and, you know, kind of get settled in for this one. This is the next weekly installment of REI Think Tank Live, where I get the incredible opportunity of bringing on guests. Most of them are my friends, so it's kind of cool because I get to catch up on people that I know and major influencers and operators in the industry. And I get to talk to them. You get to talk to them. You get to ask them questions. We all get to learn something, and it just goes round and round and round it goes. So I'm Steve Rosenberg, and I am the, we'll call moderator, host, whatever you want to call it. And today we're going to learn a lot of information, not just about a certain target market niche, but we're going to learn about information from a guy who is just, to say he's dominating the industry would be an understatement, but the guy is just killing it, and he is out there grinding. So let us know where you're watching us from. We get people all over the world, which is super cool. I got to say, South Africa, Afghanistan, you name it. And we see them popping up. So let us know where you're watching us from, number one. And number two, if you have a question for John, or me, just throw it in the chat and we will do our best. Last time we had a ton of questions, and that's what makes this conversation go so well. My good friend John Trautman today is from the Phoenix, we'll say Scottsdale area. And he and I met, I was speaking at an event, and he was gracious enough to come and speak with me. He's also good friends with the young lady we had on last week, Miss Kara Beckman, who did awesome. And so they are good friends. She introduced me to John, and that's how we met and spoke. So John does a lot of real estate, but he's got a special area that he does in real estate, which I want to talk about because I'm curious how it's doing from the last time. I actually went to Phoenix and got to roll around with him in his car and see that he owned like half the city of a certain town. And it was pretty cool seeing all the buildings he owned and what he's doing. So, wow, we got people from Aruba, Maryland. Nice. Very, very cool. So we got a lot of people here. So, John, thank you for being here today, man. I know you're busy. I know you got a lot going on. So I appreciate the time, brother.
Well, I appreciate the opportunity to be on today. Thank you. And thank you for all those very nice words that you just said about me. Thank you. Yeah.
Awesome. All right. So again, for those of you watching, give us a thumbs up because Facebook likes that. When Facebook likes that, we get more views. When we get more views, I get asked back to bring on more awesome guests like John and other people. So make sure you give us thumbs up. If you have questions for John or me, or you have got a comment or something, not about my hair, but about something else, then we can talk about it. So, John, let's kind of get into this. Tell everybody what you do. And kind of your background. I know you're from a few different states. Tell everyone kind of your quick story, what you do, what you specialize in.
Yeah. So just kind of a quick story. I was in finance, car business when I was younger. I started investing in real estate at the age of 23, bought my first rental properties at 24, and did more of the BRRRR type of strategy back then before it had a name, right? So, and then left the car business, got into lending, traditional, like more wholesale. I was a wholesale account executive for Washington Mutual. Did more of, Alt-A type stuff. And then from there, just kept, then the market crashed, right? So after the market crashed and WAMU kind of went by the wayside, and so did subprime lending, I went into Detroit and started buying houses in Detroit for a little $4,000, as much as $7,000, and we would invest, probably $2,000 to $3,000 to turn that into a stable property. And once that kind of took off, then started looking at other places in the market. And that's, I'm from Seattle, born and raised, and I started investing in the Phoenix, Scottsdale market about 9 years ago, and then accumulated, I guess enough to, get me to move down here. So, and once I was down here, I really started focusing in on commercial real estate. And commercial real estate has, it's been a process to, kind of like an evolution process, right? I started with executive suites at the bottom of the market. It took off. A lot of people, kind of like what's happening now, a lot of people didn't want to work out of their house, and they were looking for maybe a smaller space to work versus taking on a big office. I think we're still probably on the downward trend of the office. But anyways, we'll talk more about that in a minute. But went into that and then got into bigger office spaces, and then medical and retail and warehouses and you name it. So it's kind of just looking for opportunities now. And I've had a great mentor during that process. And anyways, it's been a great ride, and we mentor people now too. We help people out with whether it's residential or commercial. I still do residential. I just started a new project today. Anyways, but that's it overall. And about 4 years ago, we started Reiki, and we started helping again other people, get into the real estate market, investing. So that's it in a nutshell. So
and just so everyone knows, this guy's out there like doing it. Like we were walking properties with him, and he was showing us this huge what was that building we saw in Phoenix that you showed us? What was it prior? It was an urgent care or something at one point, and you were chopping them up?
It was that in Mesa?
That was in Mesa, yeah.
Okay. So yeah, that was a medical facility, and we're trying to keep most of it medical still, but we've loosened it up a little bit and let some other businesses move in there. And that way, when we refinance it, it's easier to get financing on medical currently.
Ah, okay.
So yeah.
Does there have to be a certain ratio that's medical, or just considered dominant, or how does that work?
Yeah. So far, we've negotiated a lot of seller financing. We haven't had to go through and do the only we did a bigger blanket loan a handful of years back, but we do get a lot of seller financing. Believe it or not, like people that are watching this, one of my biggest things that I do, like I have a contract right here with seller financing that we negotiated. We're trying to perfect it, but in today's current market, you as a buyer can kind of dictate what the terms and conditions are. So we negotiated the price, we negotiated the terms, 9 months, no payments on this most current one, but they're trying to add that interest into my payments. But anyways, it's another story. The long and short of it is, yes, the more medical use there is, the better. And we can get into lending, how that all works.
Yeah.
But primarily, the biggest thing is what I'm trying to let people know is seller financing is a huge option out there for people that may not realize it. It opens up a lot of doors for you. And I think a lot of people get hung up on, I don't know where to start with financing on, a product like this or an asset like this. And once you learn how to kind of quickly underwrite it, you could back into those numbers relatively fast and figure out what your upside or cap rate could be, or ROI. So,
well, that's a very good point. And if anyone's watching, I'm curious if anyone is wondering about seller financing, because you get a lot of people that, I get a lot, and I get a lot of people, I'll say, that will reach out to me saying, I want to do seller financing. I want to do no money down. I want, I don't want to have any skin in the game because I don't have any money. And my answer to them is, people that do seller financing or no money down, they don't do it because they have to. They do it because they're knowledgeable, and that is a tool in their arsenal. Like if I'm doing no money down or seller financing, it's because the terms are favorable, but it doesn't mean I'm doing it because I don't have money to do it, which is a lot of people think that, that's how they need to do it because they have no money. What are you seeing as far as coming up in the next evolution? And we've got some people. If you have questions, put some questions in the question comment bar. What are you seeing, though, on the seller financing world? Is it going to get much sweeter for buyers as this unfolds over the next, 6, 12, 18 months?
I think there's some people that are getting in the game right now and getting the knowledge and getting the experience in. They're going to be very wealthy. I think the people that are getting into the game right now, and some of the people that, don't get me wrong, that are in the game and continue to stay in the game. Yes, of course. I think that there's going to it's going to shift, I think, and I don't want to sit here and be like, I know everybody's got an opinion, but maybe someone could talk me into it otherwise. But I think we'll see an adjustment in the market in favor of the buyer, right? So I think it becomes a buyer's market. I just do.
Yeah.
We're already seeing it in some cases. And I know that we're seeing spikes in some cities, like Phoenix, for example. The market's hot. A lot of people are moving here. But as everything kind of, as the forbearance agreements and things like that, kind of in office space, obviously a lot of people working from home, as these things start to kind of clear out the fog and you see what the residual is from that, I think then terms become favorable for the buyer. And I think seller financing, I think on residential, obviously assuming people's mortgages and things like that, where maybe there's not quite enough equity to sell, and instead of doing a short sell, maybe you could find, or you could take over someone's payment and then find a renter or tenant and things like that. But from a buyer standpoint, I think you'll see a lot of be able to negotiate very favorable terms, whether it's price and terms, right?
Yeah.
So
Totally
typically, and what you want to look at, and what I look at, is how long could I get away with, and I don't want to make it sound bad, but how long can I get my terms for? Like typically when I negotiate something, it's 5 years, interest only, with a balloon in 5 years. And the reason I do that is that's pretty typical in the mortgage commercial space anyways. When lending, you get 5 or 10 year terms. So that's what I negotiate. And I haven't had a lot of pushback once I could get the person to understand it. There may be questions of why would a seller agree to it? Well, typically the assets I'm going after are dead assets anyways. They're underperforming to where it's hard to get lending on them anyways, because unlike a traditional mortgage on a residential property, they're taking your credit and your personal income typically into account, where on a building, they're looking at the building's income, right? They're going to look at your credit, but in most cases, not every case, but they're going to look at that and underwrite that asset. And if it's a non-performing asset and this seller understands how financing goes, that seller's going to understand that he's probably, or she's going to need to carry that note for a while, right? So that's why it's easier than most people or think. They have a preconceived notion.
I think a lot of times I completely agree. And my experience of working with motivated sellers is you don't know what's motivating them, number one. And number two, you're not the one that has the load on them and maybe the sleepless nights of having this headache, that if someone like you comes in and says, hey, I can take this headache off of your hands, but here's the deal. You've got to keep this in your name, or whatever the case may be. We're going to do a wrap. All of a sudden, you have just solved them of this headache and this problem. It's win-win. You're not taking advantage at all. You are solving a problem. And I think that a lot of times when people think of seller financing, why would they do it? Good times or bad times, people have motivation to get out of a deal. It could be a divorce, a death, downsizing, the 3 Ds. And I think it's just we talk ourselves into why we don't think someone would or wouldn't do something based on our own personal situation or feelings, or what we think the news is saying. And I just think that sometimes you got to get out of your own way and go, you know what? Maybe this guy will do it, or this girl will do it, or this bank will do it. And believe it or not, if you don't ask, I guarantee you won't get it. If you do ask, you will. So we've got a couple questions here. So if you guys have questions for John, yeah.
Can I elaborate on that real quick? I just want to say, like, even that, like the preconceived notion that it has to be certain circumstances. A lot of times that client or that seller wants a income, and at 5%, they're gaining or earning money still, right? So if you think about it that way, and typically the way that I entice someone is say, look, it's a dead asset. No one's renting it anyways. I'm going to give you some money to put in your pocket. I'm also going to stop the bleeding. I'm going to take that pain on of that, whatever monthly responsibilities are. Plus, I'm going to reposition the asset. I'm going to beautify it, right? And now I'm going to go out and I'm going to market it and I'm going to get tenants. I'm doing the heavy lifting now. And so if they get that building back, horrible for me, great for them. There's no downside for them, especially if they got money up front, or even if they didn't get money up front. But anyways, we can talk more about that.
You're right. All right. So Dr. Leon McCrae, he's asking, is the current real estate market timeframe likened unto the period of 2005 to 2007 market just prior to the crash of 08? I would say it's more of like the 09 to 2010, where it's after the crash. I think that's what we're going into. Maybe not today, but I think we're about to go into the heyday of making a lot of wealth, and a lot of deals and a lot of money will be created and made coming up in the next 12 to 18 months. And I think that's what he's asking. What's your thoughts on that, John?
I'm not sure that we've seen the dip yet that we're going to see. Yep. So maybe, I don't know about 2005, but I would say that we're on the side before the slip versus on the other side. That's just my opinion.
You think we're still kind of up here where it hasn't dropped yet, huh?
Yeah, and I'll tell you why. I think forbearance agreements, I think people not being able to foreclose or kick people out of properties, I think there's a lot of different things going on that when I say we'll see the dust settle, once that all happens, then the banks kick into gear of starting for foreclosure or notice of defaults or whatever it might be. But that's just my perception of it.
No, I get it. I get it.
I don't get me wrong. Like, for everybody watching, I know whenever we talk about a market adjustment, there's this pit in your stomach, but if you're prepared for it and you're ready for it, it's a huge opportunity. I mean, the last downturn that happened, I did really, really well. A lot of people did. So as long as you're ready for it, then I think you could do phenomenally well on it.
My perception is that in the next 12 to 18 months, there will be more wealth created than in the last 10 years. Like it'll be so hypersonic and aggressive if you're prepared. Yeah. And if you know what you're doing. I think that and I agree with you. I don't think it's here yet. It's coming. I mean, real estate is a cycle, right? It goes about 7 years is about the cycle for businesses and real estate and all that. And we're about at that time. So I think it's time that you start getting the knowledge, just like people watching right here. So if you have questions, this is the guy to ask. But this is where you start gaining the knowledge and start getting prepared, where you're sharpening that mental axe, because it's going to be time to start swinging pretty soon to cutting some trees down. So we got Jerry Armstrong is asking, do you think single family homes or multifamily homes investments during a spiraling economy? I'm assuming Jerry's saying a spiraling down economy, I'm guessing is what he's saying, but what are your thoughts?
Yeah, so a couple of things. Whether we're on the front, middle, or end, I'm still doing deals. And I think everybody, you could sit there and, get ready. You still have to get out there and get the experience. And I think that's what you're saying too, Steve, is like, you can't just sit on the sidelines and get ready. Get in and get out of deals if we're make sure you're doing them right. Make sure that you understand what you're buying and make sure that, your ARV, anyways, just make sure you understand the deals prior to, and make sure, anyways. So my point being is, don't use anything as an excuse to sit on the sidelines. Still do deals. Maybe you do less and more, depending on, you turn that volume up or down, depending on where the market is. As far as multifamily, in my opinion, has been, the margins have been squeezed so much. We've had big entities come in and, that's traded hands enough times. I just think this is where it all shakes out. And I think some of the people that bought high, and those margins, everything kind of consolidates. We saw it happen last time, where we're seeing it in the Bay Area right now. Rents are starting to drop, right? So when rents start to drop, like you typically on multifamily, you see people that are in an A type of building drop to B, B's drop to C, and so on. So those people that have the A's and B's and whatever, if they don't have the proper margins, they're going to feel it. And unfortunately, probably we'll see some people lose those. Unfortunate for them. And if you're in the position, fortunately for you, that you get to pick those back up. So multifamily, I didn't pick up a lot of multifamily on the last go around. We have some apartment buildings, don't get me wrong, but not as much as I do traditional office and things like that. So we'll see what happens. I mean, everybody's speculating, but I think we're in these really, really well to whether it's rebound or cushion the blow, if you will. So you guys, it's all about buying the real estate right. So I think on the downward, see if you could pick some up. And overall, if you're buying consistently, it's just no different than stocks, right? Like if you buy consistently, you're buying all the time. I mean, you have some maybe you bought a little higher, some you bought lower. It all kind of levels itself out. So
yeah, I agree. That's good. And if you guys have more questions, make sure you keep asking. Also, let us know where you're watching from. So just throw it in the chat, in the comments where you're at, because we get a lot of people. Go ahead.
So real quick, though, I didn't really, Jeremy or Jerry, sorry, the name's gone, Jerry. So I like single family from a fix and flip. And typically what I did on the last go round is I was buying and doing fix and flips, and I would take the equity from that and I'd put it in a long-term asset. My long-term asset was a commercial based, and you could put that in a multifamily. At the time, I just got so much more money out of office or executive suites and things like that. So I chose that model versus going down the apartment.
So that kind of goes to the next question from Lance. From Brandon, saying, would you be taking on a flip right now? And I think the answer is yes, right? You would. I mean, you would.
Yeah.
If the numbers make sense, you would keep moving.
Yeah. So I just took one on today. We closed yesterday. I might have started construction a day early, but don't do that. Yeah, we're going to get in and out of this property. We're in it right. And here's the thing. Like, if you're doing a flip right now, make sure you have multiple exit strategies, right? So make sure your equity is absolutely there. But let's just say worst case scenario, if you have to, can you rent it out, right? So that's kind of in this market where this property is, that's what we focused in on. So we actually had a couple that we were trying to do. One fell out over the weekend. I'm being a little bullish right now, and if it doesn't absolutely fit and I don't get my way on the deal, then I'm off to the next one. So, and you guys should be too.
I've heard a lot of friends of mine that I've talked to are very similar. They're saying, listen, my parameters have tightened up, and I'm not going to risk my money. These are my parameters, and I'm not going to bend on them because I've got to protect the downside. And like you said, have multiple exits that you could, hold it as a rental or owner finance it out or whatever the case may be. Right. Kevin J has one, which I think it's a good question. I have a duplex under hard money, $25K purchase, $35K in renos. After renovations with $200K, this is my first property. What would you suggest to refinance, and any downfalls or personal experiences to learn from?
Well, I mean, you're in it really good. Nice job, Kevin. So yeah, you're in it. What looks like $60,000. Nice job. I don't know what part of the country you're in, but typically I would just go through and do a refinance on that. I go to and I use and Steve, I don't know who you use, but I just go to Scotsman Guide and with one T, scotsmanguide.com, and it's got residential and commercial lending in it. It's a magazine for lenders out of the Northwest, but it's a nationwide magazine. But what it has on there is, if you go to their website, it has a matrix, and on that matrix you just fill out, city or state, property type, what you're looking for, LTV, all that different stuff. And what will happen is it will spit out like whatever lenders in your area are able to do that deal. So without knowing all your details, Kevin, that's exactly what I would do.
Yeah, I agree.
So
I agree.
Hope that helps.
Yeah, no, and if you guys keep asking questions, because this is I learned too. So I learned little nuggets that I'm kind of writing down over here as well, John. So so Lance is asking, Lance Mundo, what are your top 3 tips and resources to get started? I'm assuming real estate in general, since we don't know if he's talking flipping or buy and hold. So I'm thinking he's talking generalities, I'm guessing.
So there's a couple of different things. So when people ask me where do I get started, I tell them to go to these RIA meetup groups, reia.org. You got to get in on Bigger Pockets. You have to. I just think absorbing that knowledge, you guys. If it's something you guys, obviously you guys are here, so you know. But being on, listening to podcasts, learning from as many people as possible. Also, if you have an opportunity to work with a mentor, I think that's great. I mean, I don't know if I would be in real estate if I didn't have a good mentor in the beginning. So, sometimes there's bad mentors out there, and you just want to make sure that you align yourself with someone that's not good, but great. You want to make sure that you're learning from the best. And so I would say those would be my resources, and I'll tell you why. One, a mentor is going to push you out of your comfort zone and make you do stuff, right? That may be, you may have to find that person or fish that person out. As far as going to the REIA.org, going to those meetups, they're like 25. I hear they vary across the country, but there's going to be at least one a month in each of your guys' cities, right? In the US. So what happens there is you get to network with other new people or seasoned. You get to meet with wholesalers. You get to meet with all sorts of different people. The biggest thing in this whole thing of doing real estate is networking, right? So you want to get out there and network. So many people listen and they maybe take courses, but what they don't do is take action. And this kind of gets you out of that comfort zone to take some action. You get a little uncomfortable, things like that. So, and then Bigger Podcasts, you got to get the information, right? So plug in the Bigger Pockets and podcasts like this. And that would be I hope that helps, but that's where I would get started, Lance.
And the one thing that I would say, I think a lot of people, they don't think about, when people get into real estate, a lot of people do it because they don't want a job anymore. They don't want to be told what to do, or maybe they want it for their retirement, for down the road. I think the biggest challenge with a lot of newer investors is they don't have anyone that they're accountable to. And you mentioned a mentor or people on Bigger Pockets. And, I think that's what these forums and these real estate groups are good for, is you need to find someone that is holding you accountable. Just like if you look at all the professionals in the world, they have a coach or someone helping them because they're accountable to someone to show up for practice. You don't become the best in the world or a professional just by kind of doing it when you want, And so, like you said, I think that educating yourself, that's what I love so much about Bigger Pockets. And I'm curious what other people think, but they're so big in the education side of it. The tactical side, that's kind of the easy part, I'm going to say, of the equation. The mental side of actually becoming that investor and thinking like that investor, I think that's where the money is made. The money is made before you buy the deal. It's like, Arnold Schwarzenegger used to hold up the bodybuilding trophy mentally in his head before he ever stepped on stage. That's when the mental game is won, and that's when your money is made on the mental side. Tactically buying the property, these are just vehicles. I mean, what John does with the commercial, what I do, what other people do, that's just the vehicle to get you to A to B. So I think that we need to focus more on the mental side. So I agree. So my advice is focus on the mental side and sharpen that axe like you're doing here. Get in Bigger Pockets, join the forums, really engulf yourself in this world if you want to be a professional and you take it seriously, in my advice.
One last thing real quick to that, if I could add. Sorry, I keep adding stuff.
That's right.
Lance, a big thing of that also is through action is where it's going to happen. I often say there's so many different pieces to doing a fix and flip, for example, that you're managing a project, you're managing money, people, which is a huge thing. I call it sometimes herding cats. But these are things that when you go through a flip, not only are you renovating a property, you're renovating the way that you think. And that thought process changes, and you change through that process. And not you can't necessarily get that or earn that on the sideline. You have to experience it. So part of it's just doing it, Lance.
I agree 100%. I'm curious, the people that are watching, let us know if you're, where do you rank yourself? Are you a beginner trying to figure it out? Are you, intermediate? Are you experienced? Are you godlike like John, where you've done hundreds of thousands of deals? I mean, where are you in the spectrum? So I'm just curious, for those of you watching, I think it's good to know where you're at so that you know where the next step is in the ladder. I think it's very important to assess your situation, and then you know what the next steps are. And if you tell us where you are in the process, we can give you solid advice for the next step. So we've got Cambridge asking, do you think a lot of these people who buy high are not educated enough not to lose them?
So do you want to go ahead?
I've got my thoughts on it. I'll give you my thoughts. And if I think I understand what Cambridge is saying is, I think that, saying they're not educated enough, I don't look, everybody's going to have a bad day, right? You're going to eat a bad meal at a restaurant. Doesn't mean that you're bad at picking restaurants. You're going to buy a bad deal. You're going to get into a bad partnership. That's how it is. I've always learned from what I was taught is the two reasons people fail are laziness and greediness, because they don't run the numbers correctly or they don't do what they're supposed to do and they cut corners. So I don't know if it's a matter of people not being educated. I know a lot of smart people that make dumb decisions and do bad things. People that have been doing stuff. I mean, I don't know about John, but I make mistakes all the time. I mean, I had a company, we managed over 1,000 properties. We still made mistakes. So I don't think it's that you're not educated enough. I think that you get thrown something new that you're not used to. And I think a lot of people that right now are going in this cycle that are about to go into this dip that we're going to go into, the majority of investors have never been through a down cycle. So they really don't know. And maybe they got a little greedy. Maybe they bought properties like Airbnbs or things that maybe were above price because they didn't run the numbers correctly and they didn't have multiple exits. So I don't know if I'd say it's not educated enough. I just think that every day, you're in a sandbox with a lot of glass, and sometimes you step in it. What do you think?
I think we've all heard high tide raises all boats, and I think that's kind of what happens. We kind of sometimes get caught up in what happens with the market. The market sometimes is in our favor, and we see that appreciation. And instead of making like 40,000, maybe you make 60 or 80 or 100,000 because of it. But the same could go the other way as well. So for me, like, I don't know, you have a lot of people that probably jumped in the market and they could afford to make those mistakes. But I think some of those mistakes are going to flesh themselves out now. Maybe people that, like I said, jumped in the market without necessarily knowing, but maybe they had some money or family had some money or whatever the situation is. Yeah, unfortunately, there's going to be people that lose their houses. It just is what it is.
That's just the cycle. We've got a pretty good question. By the way, thanks for all the comments. I think this really helps everyone else too, knowing where people are watching. Andrew McKinnon is asking from Houston. Me too, Andrew. Nice to meet you. Do you see these retail buildings getting into trouble with Amazon and the like, cutting out profits and seeing these buildings being repurposed for other commercial uses? That's a softball for you, man. That's right up your alley of commercial talk.
Yeah, I think it's there's obviously there's going to be some pain there because a lot of places are. I think we'll see a pendulum shift, though. Let me just say this: we're seeing a lot of people allow people to work from home, and for obvious reasons. But at some point, you have to start looking at productivity and what happens when people work from home. Also, people that maybe work from home, you got to be really disciplined, in my opinion, to get the work done that you need to get done from home. That being said, I don't know, people, the creativeness of what's going to happen has yet to, I think, present itself. Like you look at some of these bigger box stores, like maybe Kmart's and things like that, that have gone dark, that people have repurposed into storage units and things like that. That's thinking outside the box, where they're picking them up for pennies on the dollar. So yeah, Amazon, the Northwest, I don't know what's going to happen with some of these guys. I think it's going to be interesting. That's why I'm still jumping in on some of this commercial stuff. I'm going repurposing it. Maybe some of these buildings could be repurposed into, and some of the stuff I'm looking at could be repurposed into multifamily from traditional offices. So if it's got that right layout, does it make sense financially to commit that money? Maybe. So I think as time goes on and some of these places do go dark, I think you'll see opportunity like that. I really do.
Yeah.
Well, I mean, we're already seeing it. Like that's what we just picked the building up to do that. We've looked at a few of them, and I think some of the sellers are getting nervous because if they own an office, if I'm trying to sell an office building right now, I'm nervous. And if someone's got a solid offer, I'm looking at that offer like seriously. Or it doesn't even have to be that solid. It's like it just has to be a decent offer. Decent.
Yeah. I agree. Well, do you know AJ Osborne? Do you know him? He does a lot of self storages. He was on my show. He's a buddy of mine. He was on a couple of weeks ago, but he does a lot of self storage. And he was saying they just picked up, I think he said it was a Kmart, and basically turned it into a whole self storage. I think he's in Boise, I believe. But yeah, same thing. You know, you see these opportunities. It's 4 walls and a roof, essentially, much bigger, but that's what it is. And he's just basically looking at it, seeing how he can slice it up. Storage, self-storage unit, and off to the races. So I think there's opportunity, whatever your mind will allow you to see, I think at some point, and experience, you know. I'm sure you see a lot of opportunities in buildings or houses or deals that most people don't see and never would see because of your experience. Same with me. I can look at a deal and go, I'd do this, that, and that. And most people may go like, where'd you find that? I'm not smarter than anyone. It's just experience it, and from what doing it and making mistakes and learning, and that's kind of why we're all here. We're all here to learn something. We're all here to educate ourselves, and we're all here to walk away with more knowledge than we started watching with, essentially. So we have Steve. I'm gonna try, man. Warrenecki. I think I may have gotten it. I flipped 3 deals in the LA area. I'm assuming he's saying Los Angeles. Concerned about the market correcting down over the next few months. What indicators would you look at to estimate a market bottom? That was a good question.
Great question.
What do you got?
When we spoke and you were out here in Phoenix and we had that event, the one indicator that I kind of look at is the spike and what's happening with like bankruptcies and things like that. So I haven't pulled that trend lately, but I'm sure we're going to start seeing a huge spike in that. I would say you got to kind of flush that stuff out of the system. It's no one has, like, everybody's got different opinions, Steve, on this, everything happening right now. I have good friends that are like, oh, it's not going to be that bad. Well, you kind of have to talk me into that one. And no one's been able to completely talk me into that. Like, I just think and I don't see it as a bad thing, you guys. Yeah, there's going to be some pain and there's going to be like that. Everybody says the transfer of wealth. Where are you going to get a piece of that? Or, you think about it, like everybody I talk to, let's go back to the beginning of the year. Sorry, I'm off on a side tangent. You guys.
No, go ahead, man. Good.
But everybody's like, man, I wish I would have bought in 2010, 11, 12, whatever it was. Well, this is that opportunity. And yeah, everybody runs from it, right? Like, this is the opportunity to take advantage of it. Just, are you ready to take advantage of it? And part of that's just doing a gut check and going, okay, this feels almost counterintuitive, but it's actually the best thing to do. Like, look what everybody's doing and do the exact opposite. So bottom indicators, it was so hard because the last time I rode the market down, and I could think about the exact property that I had where the market I felt turned, but I was buying through it, and indicators were I was getting more competition on at the bottom, right? People were starting to jump in, and you guys are going to see, like, when it's a good deal and it could cash flow. And that's another thing. It depends. Like, are you doing it for fix and flip, or are you doing long-term holds? So depending on what that is, like watching, there's different data that you could watch, but realty track, things like that, right? You could watch each market. We have it on our website where we track the market month over month. So if it's continuing to decline, it's probably going to continue to decline. So then you want to project out, does it take you 6 months from a start to finish on a property to fix and flip it? Well, if you've adjusted 8% over that course of time, you need to factor that into your buy price, right? And to your holding costs, to all of it, right? So you could hedge against it. Steve, you might not be able to pick the exact moment, but I would just say you got to educate yourself on what's going on with your specific market. What's time on market? Are things heating up? Are there, the business journals tell you guys so much of what's going on in your city too. Like, are there bigger companies moving in, or are they moving out, right? What is your economy growing or condensing? So there's a lot of different things that go into that, Steve. And each, like, even in the Phoenix market, I say Phoenix, but you have Mesa, Glendale, Scottsdale, Paradise Valley. You have all these different drivers because they're different cities. So you got to just take it all into account.
And, you hit on it. And I always say this: the data will tell you the information. The data is telling you a story. Whether you're paying attention to it and you're looking at it from an unbiased perspective, a lot of times we will try to make the data and the numbers tell us what we really want it to say. And even if it's not telling us that, we will look at it from that perspective. And the data is the data. And very much what you said, John, what's happening is Phoenix is different than Los Angeles, is different than where I'm at in Houston, Texas. Every city is going to be different. So, when I was here in Houston and, Los Angeles and Phoenix and Vegas were hitting bottom, Houston was not being hit as much. So I don't think you can give it this global crash. Some places they're going to be hit more affected. Some industries, are going to be hit more affected. So I think it depends on the situation. But I think that the barometer that will tell you whether or not the crash is impending is, you look at the line, and if you see it shallowing and the data is telling you, I'm not a big believer in trying to time, timing the market or time in the market. I'm not a big believer in trying to time it to a T. I think you can see the trend going. And when you see it starting to shallow, it may be time, but like you, John, when I see a deal and it makes sense and I can know that I've got multiple exits, I'm going to move forward on the deal because I feel comfortable. As long as I know that I can exit the deal and the numbers make sense, I'm going to keep moving forward. And I think a lot of people are trying to wait until that, the apex of where it hits and try to do it. And I think that's where people miss. They make the mistake because it's kind of like you've never been to the shooting range before, and now you're trying to get into a shooting competition and be a sharpshooter, but you've never fired the rifle. You've never looked at a deal. You've never walked a property. You've never ran the numbers. And now you're going, timing is perfect. I'm going to get a loan and buy a deal. You've never even done your homework and, gone out and practiced one day. And I think that's the mistake people run into. And that's where they get hurt, in my opinion.
So, and also what happens is if you're like, I was buying and fixing all the way down on the last market, right? And what I noticed was you could buy and rehab that property and still sell it and make a decent profit on it because nobody else or there's just not a lot of fresh product or inventory out there. And there's people that want to move into a turnkey house. And so you got to think like you're rare at that point. Like there's not a lot of new fresh inventory like that because a lot of people aren't doing it. So the demand's still there. You'll sell it even during, a market that's sliding if it's priced right. And if you buy it right, I mean, you should be able to get in and out of it. And Steve, to your point, like if you're gaining that experience through that cycle, when it starts to come back up, the person that sat on the sidelines you're going to be an assassin at that point. No one's going to be able to kind of touch you. Like they're going to get the scraps while you have I mean, you're well networked by then, not just on you from your agent standpoint, but your tradespeople are going to stick with you because you've helped them out during that downtime. There's just that whole network and your tradespeople and everybody, your team essentially, you've built. You're going to be able to, you're going to get inside deals. It's just going to
You're just
work
going to
out
be
much more
consumed,
better.
like you're going to be swimming in this environment. And I think, a lot of times when it comes to people trying to time this situation, it's like nobody wants to look dumb, right? Nobody wants to lose money because they think that that's a reflection on their intelligence or their ego. And I don't think so. I think that, the odds are you will make a mistake. The odds are you will lose money. The odds are you will get ripped off by a contractor or vendor or something will happen. You will be taken advantage of. That's realistic. And those are lessons if you learn from them. And I'm sure many people watching have had lessons like this. And yet the sun still comes up the next day. You still go and do deals, right? I mean, it's inevitable. That's how you learn. So trying to get in and out unscathed and think that you're going to go in and find this perfect deal so that you're at the bar telling your friends how you swooped in, got this $100,000 deal, swooped out. That's not reality. Like you said, you almost have to, watching these things, being on Bigger Pockets, doing all that. That is how you learn. And I'm curious if anyone else has had any stories that maybe they could tell us about lessons that they've learned along the way. Because I've written so many. I actually wrote a book on all my lessons because I've done so many mistakes in my deal of doing this. That's, but you have to be okay with that. You have to be able to be okay with the lessons that you learn. And again, I'm open about my lessons because I want to learn how not to make it again. And I want to learn from people like John and people on here to listen to what they're saying to go, okay, now I know what not to do next time. So we've got, let's see here. Dr. Leon is back. All right, Dr. Leon, he says, in 2008, 2009, we had 2 to 3 million unemployed. Now we have 20 to 30 million unemployed, but almost nobody is telling us what the real estate market is likely going to look like after forbearance and deferrals. What's your take on that?
I agree with you. This is where someone could talk me into that the market's not going to take a massive adjustment. So someone sell me on it, because the way I see it is once all the dust settles, we're going to have a massive adjustment. I mean, I just don't know how we don't at this point. So, I mean, yeah, it's a much bigger number than it was before. So do I think a lot of those people get back to work pretty quick? Sure. All of them? No. Mm-mm.
Yeah.
So what happens from there? Well, it's like my shirt says, we've stopped this essentially cash flow. We've stopped it. And it's one thing that makes us go around, the world go around, the economy. And so when it's like that spigot turns off, things die, unfortunately. And that could be people's businesses. That could be, and there's a lot of people in the real estate market right now. So I do think we're going to see an adjustment. I don't think we've seen the adjustment yet. That's my opinion. But someone sell me on the fact that differs from that. I just see it as we're going to see a pretty big correction. Doesn't mean that I'm not going to do deals all the way down through that. It's not like it falls off a cliff. We have to work all that stuff through the system and then get ourselves back at it. So I'm going to do my part, and I'm going to pick up as much real estate as I can. I don't know about the rest of you guys, but I plan on picking it up all the way down and at the bottom and then back up. I've been doing this for a long time. It's happened, and it's going to happen again. So let's just all agree on this call. Let's buy through at the bottom, and then you guys could basically determine what you guys want to do after that. You want to stay in the market. It's kind of addicting, like staying and doing real estate. It's hard to get out of, really, because I just love the game. But anyways, back to your point, I get off on the subject and off topic, but at the end of the day, yes. Even if it takes a couple years for us to work through this, maybe we bounce back faster. But I do think it's going to take some time to work through.
I I agree. I everything you said, I completely agree. It is addicting. Again, you see so many people, and again, there's so many people that have created wealth through some form of real estate, right? And that the thing that I really like about real estate is the fact that you can do it any way you want. I mean, you're taking commercial buildings and you're chopping them up into segmented shops for commercial, people to come in and lease. I do a lot of single family. I mean, there's just such a wide array, but all roads lead to one thing. And that one thing to me is that goal that we're trying to achieve for ourselves. And everybody has a different goal, but we all know we're doing it for a reason. And I think a lot of times, many people that get caught up in the busy of being busy, they forget why they're doing this, and they forget that future that they actually wanted. And they get caught up in the minutia of, do I buy it at, 120 or 119? I'm going to walk away if I can't get the deal at 119. And I'm like, why? Let's think about why you're doing this. Like, let's step back and really think about the bigger picture. You're doing this maybe for a better life, for something for your family, for retirement. And 20 years from now, when you're looking to keep this deal, many people are buying these properties for future. Is it really going to matter? I mean, is it, you want the safety and security of what real estate's giving you, not the actual four walls and a roof, and I that's my perception though.
I also think like what the big issue right now, Dr. McCrae, is this: right when the cities are opening back up, I think then you could kind of get a gauge on what's going to happen, but then they're shut back down. I think that just is another driver into, making us spin out even more because we're not opened up, right? And I don't want to get into the pandemic and all that stuff of the political piece, but just from a number side, when we go back in, businesses shut down, it stops the cash flow again, right? So then it's like, do we pump more money into it? So it's kind of hard. It's like, how bad is it going to be, right? In my opinion, how bad is it going to be? So then we have to look at how much stimulus money we continue to pump into the system. And once we have all this extra money in the system, now this is where it gets tricky. Those of you who have rentals, do you sell get the equity out now, or do you just ride it out? I think that, and I'll tell you why. I think we could go through some hyperinflation, right? So if we go through hyperinflation, you pay those properties off faster, but if you sell them, then you're stuck with, you got to buy them at higher prices. That the only way historically we've been able to get out of going through hyperinflation is war. So do we go to war? So these are like real topics, right? Like that we could talk about. And we're speculating though at that point, but we just know that we added so much money into the economy, we have to burn it somehow. And typically the only way we burn it is through going to war. If we don't do that, then we see hyperinflation.
Yeah, it's a good point. It's a very good point. So, John, what would you say, and I know you don't know a direct answer, but just I'm curious, what does your next 6-12 months look like on your calendar? As far as what are you looking at? What are you thinking? Like, where's your head?
So I have projects that are lined up through the end of this year that we bought a while back. So we typically have like some of the commercial stuff we have phased out, we do it in phases, right? So I'll be taking on a couple commercial strip centers towards the end of this year, repositioning those and getting, they're actually in really good areas. I think I showed you them. So yep. I have that going. I'm going to continue to get in and out of the market on quick flips. It just, the faster I could get in and out of them, the better. That's the timing on this stuff, you guys. Like, I'm not trying to take on stuff that needs an addition, that I have to go through a long permit phase. I'm looking at stuff like, can I get in and out, use the footprint that's there and make, X and keep it moving. That's where I'm at. And if I get stuck with it and the market makes a bigger adjustment, or I made a false move somewhere, okay, then I need to look at it from a rental standpoint. So I'm going to continue buying as the market goes down. And I'm going to try to acquire a lot using acquiring people's mortgages, really. And I'm going to continue to do as much commercial as I can. Within reason, I'm a very conservative investor. I've done a variety of different real estate types of properties, but I'm a conservative investor, and I don't want to put my stuff at risk. So I have to know it's a deal, and I don't chase the deal. The very first thing I ever learned in real estate from one of the most successful real estate guys I know is do not chase the deal. When you become emotionally attached to a deal is when you lose money. When you try to force the numbers, and you already touched on it, when you force the numbers to, oh, you know what, maybe I could get this much more for it, or maybe I could lower my costs. That's when I see people lose money. This is the market. If you guys are in it and you're working it, you're gonna see the deals. You're gonna see the deals. So I'm gonna be in the market. I'm gonna be buying deals. I'll probably do some wholesale stuff that I haven't really done before, but we're in a position to take that kind of stuff on. And I'll continue to work on niches in the commercial space. The one thing that in commercial, you guys, just to touch on it real quick, you typically have your mom and pop type coming in and buying something as an end user. And then you have institutional money that comes down to a certain point. So it leaves this huge void in unutilized skill sets that come in and reposition these assets, right? It's typically from 500,000 to about just shy of 4 million. So that's the space that I like to focus in on. And then whether I'm using syndicating other people's money, and I don't know, we didn't have time necessarily today to talk about it. I don't know how long we have, but doing some sort of syndication, and that's where you could really talk about other people's money and really coming to the table with $0 out of your own pocket. But that doesn't mean that you don't have a vested interest. Like that, typically when I'm doing those deals, I'm in the market. So I'm doing a syndication. I'm keeping typically about half the deal, but that means there's a huge upside return. And for that huge upside return, I got to do a lot of lifting. I got to find the building, find it at the right price, and be able to reposition and get it leased up as well. So that's on me, and that's sometimes a lot easier than just getting the money, or excuse me, a lot more difficult than getting the money.
Yeah, that's the heavy lifting.
So that's why you'll have people that, if you have that knowledge and expertise, you'll have people that want to work with you and give you that money to go to work for them. Now, typically, if you're new at that, you'll get about 25% of the deal. But as you gain experience in it, you could build a nice portfolio really fast if you wanted to.
All right, so last question, and then we're gonna have to go. And by the way, everybody, if you can, make sure you give a thumbs up for John coming and spending time, because
where's the thumbs up?
I know, I see a thumbs up here. What is your take on all the syndications that are going on? I mean, I everywhere I turn around, I see someone that's been doing this for a year or 2 years, and now they're doing syndications and stuff. What's your take? I've got my own personal opinion. I'm curious what you think.
I don't know. Like, it just depends on what the person's doing. If they have a very specific niche and you're good at it, great. Sometimes some of the deals I see where people are syndicating, there's just no margin there. There's not a good ROI, or the cap rate's too low. People bring me stuff like that just doesn't make financial sense. I want to do stuff that actually pays a decent dividend. And I also want to make sure that I'm doing stuff that if there is an adjustment in the market, I have cushion. I don't like things like that are, and I know, like, I think it was Steve that was in the LA market. Like, when you look at commercial stuff out there and it's trading at a 3, 4, 5 cap rate, well, you have to look, like, if interest rates are 5.5 by this, I mean, I know not everybody's going to follow, but typically a cap rate, you back into it, it doesn't include your loan. So if you have a 5 cap rate and then you have a 5% interest rate, you're basically a wash. So it doesn't make sense to do stuff like that. I like to look at stuff at 10 plus percent cap rate. we can get into ROI too. I get criticized for the way that I do this. So I'm sure I can't see the comments, but whether it's cap rate or ROI, it doesn't matter. It's just, I want as big a return as possible. How about that? So,
Yeah.
or cash on cash. So,
well, John,
so I don't know. Yeah.
I gotta say, man, I always enjoy talking to you, man. You're a wealth of knowledge. We didn't even dip into the other stuff you do, so I'll have to have you back on, or maybe you and I do a show when next time I'm out in Phoenix, and you can show me what part of the city you own now when I'm back out there again. John, if somebody wants to kind of reach out and connect with you and kind of get to know who you are, what you do, all the stuff, because you got a lot of facets to you, how would they find you?
So Real Estate Knowledge Institute is the company, realestateki.com. Or if you go to my Instagram, it's usually where I'm posting stuff. And I post stuff daily. That's John_Trautman. It's Trautman. So John_Trautman for Instagram. The one thing I do want to say to you guys to that is I try to post stuff daily that I'm doing, projects that I'm doing. I think it's important. And there's a lot of people out there that are pushing real estate stuff. And I always say, just look at what they're doing. Are they showing the same checks from a year ago or 2 or 5 years ago? Or are they doing stuff every single day? I don't drive around in a Lamborghini and flip properties, but I do go out every day and I work the real estate market. So just, like you, Steve, I think most real estate investors that are real estate investors want to put their money in performing assets, not liabilities. So it's just something I always say, like, pay attention to. And if you have I was on, when I did Brad's podcast, we talked about this. If you have an asset that's paying for those type of toys, great. All I'm saying, you guys, is just make sure that, you guys are working with people that actually do real estate. That's
yeah, I agree. Put their money where their mouth is. I agree. And I know Bigger Pockets is really good about making sure that, the people that are on the shows, the people doing it, they're actual doers, which is good. That's kind of what we all want. I learned from you. I learned, just walking those properties with you that day, man. I learned a lot just listening and seeing what you were doing and how you were slicing those things up. And I was taking a lot of mental notes, and I, again, I always appreciate it. So thank you very much. Thank you for your time, for Bigger Pockets.
I appreciate all the kind words, seriously, and I appreciate you having me on here and being able to share my experiences with everybody. Seriously, thank you very much.
It's no problem, man. No problem. For those of you if you want to follow me, I've got about a fraction of followers that John has. It's Rosenberg Steve, and I'm here. I'm on Facebook. I'm on Bigger Pockets. I'm on all these channels and stuff. So I do quite a bit of stuff. I'm kind of one of those guys that's everywhere. That's the easiest way I could put it.
No, you're out there spreading the word and getting the word out to people. It's important. Like, seriously, this is phenomenal stuff. Like, you had Kara on last week. It's good stuff. Like, I think people want to hear from people doing real estate. So you're that conduit putting that together for people. So I think it's great. So thank you. Seriously. No problem.
My pleasure. My pleasure. All right, everyone. Well, thank you very much. Thank you for watching. I'm not sure who I'm going to have on next week, but I'm sure we'll let you know. And John, thank you. Bigger Pockets, thank you. And we will see you all next week. Talk to you later. Bye-bye.
Thank you.